Ladies and gentlemen, you need to listen very carefully because what I'm about to tell you could save your financial life. Most people are completely blind to the storm that's approaching. I'm not talking about a minor market correction. I'm talking about a full-blown economic disaster that will make the last financial crisis look like a picnic. And here's the kicker. When it hits, the only assets that will retain their value are the ones your grandparents trusted for generations, gold and silver. This is a serious warning and the clock is ticking. People have been lulled into a false sense of security about their money. And that's exactly what makes this so dangerous. You see, most people think that the dollars in their bank accounts, the euros in their wallets, or the yen in their savings are real wealth. They believe that because it has a number on it and because the government says it has value, it's safe, but the truth is far more unsettling. Paper money is an illusion. It's a promise that can be broken, a system built entirely on trust. And when that trust falters, the consequences are catastrophic. History has proven this time and time again. Every paper currency that has ever been created, it eventually loses its purchasing power. Some collapse slowly over decades, eroding savings gradually through inflation. Others fail spectacularly overnight. And yet, despite all these lessons, people continue to put blind faith in a system that is inherently fragile. It's important to understand why paper money is so vulnerable. Unlike gold or silver, it is not backed by anything tangible. It has value only because the government enforces it and because people collectively agree to accept it. That agreement is fragile. It can be undermined by reckless monetary policy, excessive government spending, or by a loss of confidence in the institutions that issue it. Today, the world's major currencies, particularly the US dollar, are floating on this fragile foundation. The Federal Reserve, the European Central Bank, and other central banks have the ability to print unlimited quantities of money, and they do so with alarming regularity. Every time they inject more currency into the system, the purchasing power of every existing unit diminishes. People call this inflation, but that word is far too mild for what is really happening. It's a stealthy theft quietly eroding the wealth of ordinary citizens while benefiting the few who are connected to the printing press. Consider what has happened in the past century. The US dollar has lost over 90% of its purchasing power since the creation of the Federal Reserve in 1913. That's not an accident. It is the inevitable consequence of a system that allows central bankers to manipulate money supply at will. Every generation has had its savings quietly destroyed, its pensions devalued, and its wages eroded, all because the currency they trusted was nothing more than paper promises. And yet, despite all of this, most people still think their money is safe sitting in a checking account or under their mattress. They fail to grasp that what they hold is not wealth. It's a liability that depends entirely on the competence and honesty of the monetary authorities. The fragility of paper currency becomes even more obvious when we examine crisis. Hyperinflations are extreme examples, but they reveal the truth. When confidence disappears, so does value. Germany in the 1920s, Zimbabwe in the 2000s, Venezuela today, all illustrate the terrifying speed at which paper money can become worthless. In these cases, people literally needed wheelbarrows to carry their daily purchases. And it wasn't because people stopped working or producing, it was because the currency itself was destroyed by overissuance and mismanagement. The lesson is clear. Money that is purely a creation of government, untethered from anything tangible, is inherently unstable. Even in more stable economies, the threat is always present. Central banks tell us that inflation is under control, that economic growth is healthy, and that interest rates are normal. But these assurances are superficial. The reality is that every intervention, every bailout, and every quantitative easing program chips away at the integrity of the currency. The system is propped up by debt and artificial stimulus. As long as confidence persists, the illusion holds. But all it takes is one shock, a banking crisis, a debt default, a loss of faith in government to shatter that confidence. And when it breaks, the paper money you thought was safe instantly becomes a fragile relic, barely able to buy even a fraction of what it once did. People don't realize how vulnerable they are because they've never experienced true monetary collapse. They've grown up in a world where fiat money has been dominant their entire lives. They've been taught that gold and silver are antiquated, that cash is king, and that government promises are reliable. But reality does not care about what we've been taught. When a currency fails, it fails indiscriminately. Your savings, your wages, your pension, all can be wiped out. And there is nothing you can do to stop it unless you take steps to protect yourself in advance. The truth is uncomfortable. Paper currency is fragile because it is not real wealth. It is a system of trust, collective agreement that can be undermined by human error, greed, and short-term thinking. Gold, silver, land, and other tangible assets are fundamentally different. They represent real value that cannot be printed at will, yet most people ignore these lessons, content to live in a world of illusions. When the next crisis comes, as it inevitably will, the vast majority of people will be completely unprepared. They will realize too late that what they thought was money was merely a fragile promise, and promises can be broken. What most people fail to understand is that the economic system we live in today is built on a foundation of sand. For decades, central banks have manipulated interest rates, inflated asset prices, and encouraged borrowing as if there were no consequences. They've created a debt-fueled illusion of prosperity, and people have been trained to believe that this can go on indefinitely. But history tells us otherwise. Every time a financial system becomes unmed from reality, there is a reckoning, and the next one is coming sooner than most. Realize this won't be a minor market correction or a temporary slowdown. It will be a shock that rattles the very core of the global economy. The signs are everywhere if you know where to look. Stock markets are at historic highs not because businesses are stronger, but because central banks have poured unprecedented amounts of money into the system. Bonds are overvalued with yields artificially suppressed to record lows. Governments have accumulated debt that is beyond comprehension, relying on new borrowing to pay old obligations. This is not stability, it's a house of cards. One wrong move, one unexpected event, and the whole structure can collapse in an instant. The problem is compounded by complacency. People assume that because the markets have been rising for so long, they will continue to rise forever. That is the exact mindset that guarantees catastrophe. When the shock hits, it will be swift and brutal. Stocks will plunge as investors realize that the earnings they were banking on are nothing but illusions. Bonds will implode as interest rates rise to reflect the true risk of lending to over-leveraged governments. Even cash, which people cling to as the safest asset, will lose value rapidly in real terms as inflation accelerates and confidence in the currency erodes. Those who have relied solely on paper assets will be caught off guard, unable to protect themselves from the collapse. Meanwhile, those holding real assets, gold, silver, and tangible wealth, will be insulated from the worst effects, and in many cases they will emerge stronger because the rest of the system will be revalued around them. What makes this shock even more dangerous is the interconnectedness of the global economy. Problems in one country, whether it's a debt crisis in Europe or a banking collapse in Asia, will ripple across the world. Financial markets are no longer isolated. They are part of a vast global web of credit, trade, and investment. A failure in one corner can trigger a cascade of failures everywhere else. This is why the next crisis will not be contained. It will be felt by everyone from Wall Street to Main Street. People think diversification alone will protect them. But when the underlying system is rotten, diversification is little more than a mirage. Most people also fail to grasp the role of government in amplifying the shock. Governments are addicted to spending, running, deficits that grow larger by the day. They rely on the printing press to mask the true cost of their programs, but that is a temporary solution. Eventually, markets will demand the truth, and when they do, the adjustments will be sudden and painful. Bonds will be repriced, interest rates will spike, and the cost of government borrowing will soar. This will ripple through the economy, causing layoffs, bankruptcies, and a sharp contraction in consumer spending. Those who have not prepared for such an event will be left scrambling, trying to preserve wealth that will already be eroding. And it's not just financial markets that will be affected. The shock will touch every part of daily life. Prices for basic goods will rise as currencies lose value. Jobs will be lost as companies adjust to the new reality. Pensions and savings will be gutted as the purchasing power of money collapses. People who assume that a paycheck or a 401 would be sufficient to provide security will discover that nothing is guaranteed in a system built on debt and illusion. The coming economic shock is not hypothetical. It is inevitable. Those who recognize this and take action in advance will survive and even prosper. Those who ignore it will be caught in the chaos. The key lesson is that markets are forward-looking. When investors suddenly realize that the fundamentals do not support current valuations, the adjustment will be violent. Prices will drop precipitously and volatility will spike. The public, having been lulled into complacency by years of artificially inflated markets, will panic. And panic has a way of feeding on itself, creating a self-reinforcing cycle of selling fear and further collapse. There is no way to avoid the initial shock, but there are ways to protect oneself. Real assets, hard commodities, and investments that cannot be manipulated by central banks will be the lifeboats in the storm. Most importantly, this shock will expose the truth that paper wealth is inherently fragile. People who have believed in the stability of the financial system will be forced to confront the reality that value is not created by government promises or accounting entries. It is created by tangible, scarce resources. Gold, silver, and productive assets are immune to monetary policy. They hold intrinsic value and cannot be destroyed by central bankers. Those who fail to recognize this lesson will learn it the hard way. The warning signs are clear, and yet most people choose to ignore them. They continue to invest blindly, accumulate debt, and assume that the system will protect them. But when the next crisis hits, and it will hit with a force far greater than anything most of us have experienced, the illusion will shatter. Those who are prepared, those who hold real tangible wealth, will not only survive, they will thrive. The rest will be left scrambling, watching their paper fortunes disappear into thin air. The coming economic shock is not a matter of if, it is a matter of when. And for those who fail to heed the warning, the consequences will be severe. Most people have completely misunderstood the role of precious metals in the economy. They see gold and silver as collectibles, as something for investors to dabble in when the stock market gets boring, or as an outdated relic from another era. That is a profound mistake. Gold and silver are not just investments, they are money. They are real wealth, tangible stores of value that have stood the test of time. While paper currencies come and go, yet the vast majority of people treat them as optional, ignoring the warning signs that their own currency is under siege. The consequence of this ignorance could be devastating, and the window to protect oneself is rapidly. The people assume that because we have a modern financial system, precious metals no longer matter. They believe that central banks, government guarantees, and digital accounts make the system safe. They are wrong. In reality, these metals have historically been the ultimate safeguard against exactly the kind of crisis we are now heading toward. When fiat currencies collapse or lose purchasing power, gold and silver retain their value. They are not subject to government printing, debt accumulation, or reckless monetary policy. And yet most investors continue to pile money into paper assets that can vanish overnight while ignoring the very assets that will protect them when everything else fails. The misunderstanding runs deeper than mere ignorance. Many people think that gold and silver are only for those looking to speculate to make a quick profit on the ups and downs of the market. That's not what these metals are for. Their true value is insurance. They are a hedge against economic mismanagement, currency devaluation, and financial chaos. And right now, the need for that insurance is greater than it has been in decades. Governments around the world are running deficits that are astronomical, printing money at unprecedented rates and creating bubbles in every corner of the financial system. Those who fail to see that gold and silver are a shield against these risks are setting themselves up for disaster. Most people also underestimate how undervalued these metals are relative to paper assets. Over the past century, fiat currencies have been destroyed by inflation, losing more than 90% of purchasing power in some cases. Gold and silver, by contrast, have maintained their value. But today, the majority of the population still holds little or none of these metals. They are heavily invested in stocks, bonds, or cash, all of which are dependent on a system that is fragile and overstretched. When next crisis hits, the discrepancy will become painfully clear. Those holding paper assets will watch their wealth evaporate, while those who recognize the intrinsic value of metals will have preserved and even enhanced their purchasing power. There is also a psychological barrier at work. People are conditioned to trust what they can see on a screen account, balances, stock tickers, and online statements. Precious metals, by contrast, are tangible. You have to hold them, store them, and take responsibility for their safekeeping. That tangibility makes some people uncomfortable because it requires an acknowledgement that the financial system may not be reliable. They would rather maintain the illusion of safety, placing faith in an abstract system while ignoring the realities of history. But history is not optional, and it does not care what we believe. Paper money always fails eventually, and when it does, those who ignored precious metals will wish they had acted sooner. Another major misunderstanding is the perception that gold and silver are only relevant during hyperinflation or catastrophic events. People think I won't need gold until the dollar collapses completely. But this is a dangerous miscalculation. Gold and silver rise in value not only in extreme crisis, but also during periods of currency devaluation, rising inflation, and economic uncertainty. They respond to market signals long before the average person realizes there is a problem. Waiting until the collapse is obvious is too late. The smart investor recognizes the signals and position themselves in advance. Finally, most people underestimate the speed at which the world could revalue these metals. In times of crisis, markets can move violently and without warning. Gold and silver can go from being overlooked to being in an extraordinary demand almost overnight. Those who have ignored the opportunity will be left scrambling, trying to buy at inflated prices, or watching their wealth evaporate in other assets. Those who understand their intrinsic value, who have positioned themselves wisely, will not only be protected, they will benefit. It's not speculation, it's preparation. The reality is simple: precious metals are not optional. They are the ultimate hedge against a fragile financial system, a collapsing currency, and economic chaos. Most people fail to understand this, and that failure could cost them dearly. Gold and silver have survived empires, wars, depressions, and financial crisis. Paper money has not. Those who cling to fiat currency, who underestimate the importance of tangible wealth, are taking an enormous risk. Those who recognize the truth and act accordingly are not just investing, they're protecting their future. In the end, a massive misunderstanding of precious metals is not just ignorance, it is complacency, arrogance, and a refusal to confront reality. People assume that the modern financial system is permanent, that central banks can solve every problem, and that paper wealth is reliable. All of these assumptions are dangerously flawed. Gold and silver are not a luxury or curiosity. They are the most fundamental form of financial insurance. When the next crisis hits, those who understood this will have security. Those who ignored it will be left with nothing but the empty promises of paper money. So here's the truth that nobody else is willing to tell you. The financial system is on borrowed time, and the next wave is going to be merciless. You can ignore it, you can stick your head in the sand, or you can act now and secure your future. Gold and silver are not a luxury, they are a necessity. Don't wait until it's too late. History favors those who are prepared, not those who are lucky. And trust me, luck will run out faster than you think.